Hello there, this is FairBinaryOptions.com, and this is the Euro US dollar. Over the weekend we are looking at this Euro US dollar as I'm expecting a so-called common flat to end somewhere in this week to come and prior to the ECB. Now, as you very well know, the ECB now is not meeting on Thursday anymore, as they changed a bit the way the meetings are being scheduled and everything, plus the minutes and so on. And this gives enough time for Euro US dollar to move to the downside. I'm looking for a Euro US dollar to go and to move to the downside with ideally an impulsive move that already started last Friday in here, and to go with something like 1, 2, 3, 4 and stretch all the way with the fifth wave probably in here would be ideal. Or ideally this one would be a fifth wave extension in the term of impulsive, in terms of the yield waves. Now, why necessarily looking for an impulsive move, and what should be part of? From my point of view, everything that started from this low in here and to this low, to this high in here, is nothing but an impulsive move, and I would label it in here with this being the first wave of this impulsive move. And definitely, according to the Elliott waves theory, we should look for a second wave, but because the retracement in here is more than 61.8 when compared with the previous first wave in here, then I would say that this is only wave A. But in order for this to be a wave A that corrects the first five-wave structure, it's got to be of a lower degree. So we go with wave A and a different color just to signal the lower degree that we have there. And of course we're looking for a B wave. Now this B wave here was quite a beauty, in the sense that it is nothing but a flat of a lower degree. This one is being called a common flat as well, because the B wave is the most time consuming. But actually on a bigger degree we should look now for a C wave. For a C wave in here that should stretch something like into this area. There is no exact science regarding where exactly the C wave should end. What we do know is that it gotta go below 10680, as those levels were the lows in the previous wave A. And therefore, just like that, we have a possible five-wave structure, because the C wave in a flat is always a five-wave structure, or an impulsive move that ideally started last Friday. Now, with this being holiday on Monday, with Easter with the Easter holiday still ongoing, ideally we should see the move on Friday being retraced, and therefore we would like to trade put options on the Euro US dollar, with the expiration date being end of week. So put options on Monday, expiration on Friday with end of week will be the ideal let's say trade for Euro US dollar. So put options, by the time market is opening on Monday with end of week expiration date. This is being called a flat, as from my point of view only part of the second wave. So it's not the entire second wave here, but part of the second wave. So we gotta have a C wave now to go below 107. Thank you very much for being here. Have a great day. Bye bye.